Over the last few years, investing has gone from making slow, steady returns over a long period of time to let's follow Wall Street bets into battle and hope we don't lose all our money. Millennials and Gen Z have been taking on the professionals with the GameStop short squeeze and the rise of doggy coins like Dogecoin and Shiba Inu, to name a few examples. Through new, cheaper platforms, it's easier than ever for retail investors to get into investing. And given everyone's had a lot of time on their hands more recently, the interest in investing has risen significantly. This social media-fueled growth has pushed one particular broker into the foreground. eToro is one of the leading brokerages in the space, offering everything from currencies, stocks, commodities, and crypto for investors in over 140 different countries. But what is eToro? What sets eToro apart from its competitors, and what is their story? Here's how it happened. Firstly, what is eToro? Well, they're a world-leading brokerage platform, but perhaps they're more well known as the brokerage that people use for social trading, being able to copy other investing influencers whenever they place trades. The idea is that new users join the platform and learn from more experienced traders. They then identify successful investors on the platform and copy them, with eToro able to automate this. The investing influencers, or those who are copied, then earn perks like a monthly payment of up to 2.5% of the yearly average amount of money invested by the copiers. eToro itself was founded in 2007 by two brothers, Yoni and Roman Asia, alongside David Ring, but back then it was known as Retail FX. Their view was that by offering a cheaper and simpler platform, eToro could win over younger, more tech-focused investors, and this is still true to this day with most new users in their early 30s. They wanted to improve financial transparency in the market by making it much more accessible to make investments. Retail FX focused on graphic representations of financial instruments to make investing easier and more fun. The team then launched Webtrader to help people trade financial instruments like currencies and commodities via CFDs. But the real change came in 2010 when the team launched OpenBook, the first online social trading platform. They knew they were onto a good thing when they won the Finovate Europe's Best of Show in 2011. OpenBook meant that investors no longer had to learn, test, and change their strategies, but instead they could imitate other investors on the platform who had a track record of success in the markets. Not only could people copy, but they could also interact with the successful investors who were posting status updates on what was really an investing social media platform. By 2014, eToro took another step in the right direction, exposing its customers to Bitcoin through CFDs, and continued to expand their crypto coverage. When crypto hit the big time in 2017, eToro was thrust into the limelight as one of the few brokerages offering everything all in one place. This success led to eToro receiving private funding of $100 million in 2018, and they're using that money to continue innovating, including creating crypto wallets, expanding to US markets, and investing in blockchain research. As eToro have grown, so have investing influencers like J. Edward Smith, who's the most copied trader on the platform with around 25,000 followers and over $5 million in assets under management. During the first quarter of 2021, eToro gained more than 3 million new users to pass 20 million global users by June 2021. This has come in an environment where financial investing has been democratized and millions of people have greater access to online resources, coupled with a don't care attitude towards losing money through meme investing. Whilst this might cause a significant correction over the next few years, it's good for eToro, who profit from the spreads on the trades. And as far as Yoni Asia is concerned, he fully believes that copy trading is a form of the sharing economy. And that's how it happened.